I don't want to talk about that. So we're not gonna talk about that today. Just give me 1 second, guys, if you're seeing me because I couldn't hear the music, so I'm just making sure that everything is fine, and also trying to share the video as well. It's not on Facebook, y'all. Okay, guys. So when we come back, I don't know what I'm going to talk about, but we're going to talk about something money related, guys. So give me 5 minutes, and we'll be right back. Can you remove me? Not ready. Can you loop it, please? Hey, guys. Welcome to the Money Zone. I'm your host, Folasade the Accountability Accountant, guys. Look, it's been what, about a week or so. You guys just bear with us while we're getting everything in order, because I feel like I'm like all over the place or whatever again. So guys, tonight we're gonna just talk about what is going on this tax season, because I've always been preparing you guys for months ahead, but you guys still seem to not pay attention to the advice that I give you guys, because a lot of you are still confused. It's just so much. So let's have a discussion. So first things first, guys. The IRS is really working right now. Okay? The IRS is really working right now. They are working so hard to the point where they're sending out adjustment letters, okay, to people that don't even need to amend their returns. Let me repeat that. The IRS is working really, really hard right now. And I warned you guys about this. And remember, guys, just to give you guys a disclaimer, a lot of times when I come and talk about this, 99.99%, it is actually something that has happened in my office. Okay, something that we have experienced, or a colleague of mine have experienced, or one of my team members have experienced. It's real world. So I'm not going to come up on here boasting for you guys, telling you what is not going on and lying. Okay, so let me put that in context. I'm not a liar. Okay, I'm a straight shooter. So here's the thing, guys. The IRS is sending out notices to people that don't even need to amend their tax return. So, for example, let's say, for example, you have income that you didn't report, right? That is normally when you would get an adjustment letter, CP 2000, if I'm not mistaken, that says, oh, we found additional income that you did not report on your tax return. Here is the adjustment. If you agree with the adjustments, just sign off and make a payment plan or whatever, or make a payment. If you don't agree, then provide us proof on why you don't agree with us. If that's the normal situations, right? You got some income that you didn't claim. Guess what's happening there, y'all? They are sending out notices for people that have already included the income on the tax returns. Okay. So, what does that tell you? If y'all remember last year, we're in 2023. So, let's say, for example, I think I said this February 2022 or something like that. I'm going to have my team pull the video and pull it out for you guys. I asked you guys to make sure you're filing correct and accurate tax returns at that point, because if they were just to so happen to send out a notice to you randomly, then you will be responsible to either back it up, respond, or do something. However, that notice can trigger some credits not being able to be taken, some additional taxes that you may have to pay, and so forth and so forth. So right now, number one issue that we're having tax season right now, people are receiving notices saying that they need to amend their tax returns in cases where it's not relevant and in cases where it is relevant. So this is why I begged and I pleaded for you guys last year to do everything right. But you guys seem to still be trying to just do tax deductions, still trying to just take the shortcuts, still don't want to do your bookkeeping, still don't want to do things right, still trying to shop around, find the highest refund, still doing shady shit on your taxes. Remember, guys, we on Beltway Radio today, so just bear with me if you hear a little cursing, guys, because it's my little nightcap, okay? Fun time, okay? So, here's the thing. That's one problem we're having. The second problem that we're having, y'all, is that, as I warned y'all, your refunds are lower or you not getting one. Your refunds are lower or you not. No, I'm not happy about that. But your refunds are lower, guys. And the reason why I constantly stay on top of my readings and stand on top of being the expert that I consider myself to be, so I can bring you guys the information prior to it's actually happening. So many of you are still surprised that your refund is lower after I warned you guys 9 months ago. I warned you guys 7 months ago. See? Queen of Trolls said on Instagram her refund was low. I warned you guys 5 months ago, prior to the New York Times, prior to CNN, prior to all of the major publications. Like, I'm ahead of the game, but you guys still seem to not listen. So number two issue, that a lot of people refunds are much lower this year. And so why issue? because a lot of you have pre-planned certain things that you wanted to do with the money. Some of you probably wanted to fix your house. Some of you wanted to buy a car. Some of you wanted to pay school fees for your children. Some of you wanted to put money into your retirement account. Like, it was just so many different things in different scenarios, and where I see clients' goals being stomped on this year because they didn't receive the refund that they were anticipating. So that's the second thing. So guys, to prevent you from being unprepared, right? This is why you guys want to make sure that you tune in into my radio show, tune in when I do lives, and subscribe to my mailing list so you guys can be well aware of when situations like this happen so you can plan for the year. Because if many of you knew that you wasn't going to get your $3,000 refund, then you probably would have spent your money a little bit differently, right or wrong. You probably would have been saving more last year. You probably would have been just a little bit more disciplined financially if you guys would be paying attention to the things that I am saying. Yes, it's cool and all, right? When I scream and all, because that's when it seems like y'all. But when I'm talking real stuff, like, y'all just need to pay attention to that too, because you need to implement that. So that's the second issue. So number one, random IRS notices are coming out. Number two issue is that the refunds are lower. All right, y'all with me? The third issue that we're having this year is that y'all asses are still disorganized. Y'all are running these businesses without any bookkeeping. Y'all are still disorganized, and I'm begging you guys, this disorganization is what's going to cause you to get audited. This organization will cause you to not be able to substantiate and back up your expenses. This disorganization is going to cause you to leave money on the table. This disorganization is going to make you pay more taxes than what you're supposed to. Guys, we have to get organized if you want to pay as little taxes as you possibly can, okay? And stomp on the tax code or whatever y'all want to do, right? You need to make sure you're tracking everything that come in your business, which is your income, and everything that is coming out of your business. You're doing yourself a disservice when it comes to growing and scaling your business, and also preparing yourself to file your taxes. As a business person, y'all should not be scrounging around trying to find expenses. Y'all should not be scrounging around pulling your records together. Like, we are in the technology age. We're in the century. Like, we have so many software, so many apps, so many accountants like myself that do bookkeeping, so many different options for you guys to tighten things up. And because the IRS is sending out those random notices, as I said in number one, you want to be prepared. Because just what if it's an expense that they're telling you to back up, that's the account that you wasn't tracking? And what if that expense end up saving you $3,000 in taxes? So just because you did not properly keep your records, you're going to end up having to pay back you're going to end up having to owe $3,000 to the IRS just because you did not properly track your income and your expenses. It is we got to get organized, guys. Like, I don't know if I have to call now bookkeeping organization for y'all for you to start doing it. Like, what do I have to do? But I gotta say, bookkeeping is organization. Organize. What am I supposed to do? Y'all killing me. Because see, this is the thing, guys. Without you tracking everything, you're leaving money on the table. You're not able to maximize your expenses. I'm having to delay your tax filing for months until you gather your stuff. Because, for example, just to give you guys some real life example, one of my clients, she was originally owing over 60 something thousand dollars in taxes. And then I'm like, okay, are these all of your expenses? She's like, no, Folasade, these are not all of it. I don't have everything. So I sent her back. I said, would you rather owe 60,000 or owe 15,000? She said 15,000. I said, well, go get your expenses. So she started to compile. Now, guess what? I finalized the return. She don't even owe not even $27,000 in taxes. So originally, because she didn't have all of her expenses and stuff, she was going to owe 60 something thousand plus. Okay. Now, with the additional expenses that she was able to accumulate by going through bank statements and stuff, right? And her transaction history, right? She was able to find the additional expenses, which reduced her tax liability by $40,000. And some of you, that might be a lot of money, but let's take a lower amount. Let's say, for example, you didn't do bookkeeping for your business and you found an additional $5,000 in expenses. That means you would have paid $3,000 in taxes for no reason. So that's the third issue. So number one issue, random IRS notices that you guys are receiving. The second issue we're having this season is that the tax refunds are much lower. The third issue is that you guys are still disorganized. You don't have your bookkeeping, you don't have, and this is across the board. This is also for my business people and for my individuals. So some of you that don't have a business, right? You're trying to take your charitable donations. But guess what? You don't have a record. You can't even tell me what you donated. You couldn't even tell me find the receipts from the Goodwill. Some of you didn't even request the receipts. How are we going to be able to claim stuff, guys, if we're not requesting things, if we're not tracking things, if we're not keeping up with things? And guys, the reason why I'm saying this is simply because it is so much happening right now. It is, I don't even want to talk about politics today because we're not talking about that today. But y'all see what's happening? We out here fending for ourselves now. We fending for ourselves. Straight up, fending for ourselves. So with us fending for ourselves, you have to make sure that you're not overpaying the taxes. You have to make sure that you're not setting yourself up to get audited. You have to make sure that you're doing your part to make sure that you and your family is good and getting organized. Listening to when I advise you guys of when situations like this, where your refunds will be lower, is key for you being in control over your finances. Like, are we going to start getting in control or are we going to blame everybody for our situations? Because y'all know, as the accountability accountant, guys, we are solely responsible. We give what we request. We give what we require. We get what we require. We get what we request. And your value, what you bring it to the table. So wherever we are right now, we have to accept responsibility for it. Unless somebody completely swept everything under the rug from you, then I don't blame you. But then again, was you too loosey goosey? They had no discernment, but we're not gonna go into that. Okay. So number one, our random IRS notices. Number two, y'all refunds are lower. Number three, y'all are still disorganized. Okay. Number four, keeping records. Y'all know I'm an advocate of bookkeeping and proper record keeping, right? Right? And I don't know if you guys watched my live stream or my video I did a couple of months ago when I said that the mileage requirements, your mileage log, and what you got to do to properly beat an IRS audit with your mileage log, the impact of it. Come to find out, y'all, between us, it's not only the mileage log that the IRS is scrutinizing, y'all. Well, first of all, if your mileage log is not legit, it's not even going to fly now. Straight up. Based on the recent tax court case that I watched, not that I watched, that I read, they went line by line through that person's through that person's mileage log, y'all. Talk about like this. I should have my glasses. They went through everything, y'all. And guess what? They realized that they had some bogus mileage destinations in the log. They found several, not a lot, but several instances where the owner said, "Oh, I was here," and then a date or something else didn't back it up or something. Like they would say they were here, but they were in another state or something. Like I will have to pull it up, or that'll be another show that we talk about. So basically, y'all, with the fact that you're being disorganized, you're going to be in the situation like that person where you're going to have to recreate your mileage log. And guess what? Because they're scrutinizing everything and have the time to actually string along the audit with me and with you and to really review what y'all give them, guess what? They're going to see the errors in your mileage log. So this is why now I've been requesting y'all again. I hate to keep saying I'm repeat because I might as well don't even go live. My team might as well just go ahead on and just pull up all my old content and just use that for right now. And I just might as well just sit here and just do everybody's taxes. Because I done already told y'all this. Because now just having a mileage log not going to fly. Especially if you're not keeping it up to date daily and it's accurate. Y'all thinking y'all can make up records now? Throw anything together now? No sirree. That is not going to fly anymore, guys. So that goes back to, I think that's number 4, disorganization. No, number 3, disorganization. If you want to maximize your taxes, y'all, you have to keep proper records. Nobody will ever tell you this, but let me be very frank and very honest with you guys, just so we can all be on the same page. If you want to maximize your taxes, you have to keep proper records. It's no way around it. It is no shortcuts, no easy route out. The person that pays the less taxes and takes the most tax strategies has the best, unless they just straight cheating the system and just throwing anything on there. I'm not talking about that person. But the real person that's really maximizing their taxes, y'all, guess what? They got records, they got logs, they have everything. And they're doing it constant, weekly. It's a habit, it's a routine. They're not waiting until at the end of the month and they're guessing, oh my gosh, I went on ahead and traveled to Mexico. Oh my gosh, what did I do in Mexico? No. While they're traveling in Mexico, they're keeping proper records. So now we're here. We're just repeating the cycle. The cycle of trying to use the tax system as a hustle. And it's over and done with. And the reason why I said they're digging deep into all of the different tax deductions and things, because they just did another ruling that was just a tax court case about accountable plans. So I've never really discussed that with you guys before. I've mentioned it a few times, the beauty of accountable plans, but I will not go into that. But that is another tax loophole, a major one that nobody ever tells you guys about, right? They're scrutinizing that as well. So they're scrutinizing travel, mileage, accountable plans, all sorts of deductions. So where does that leave us? Remember, I'm a taxpayer just like y'all. Remember, I have to file my tax return just like y'all. And as an IRS enrolled agent, I can't miss a payment on my installment plan. I can't owe the IRS a lot of tax. I have to stay not real clean. So I deal with the same issues that you guys deal with. Okay. So now with them scrutinizing all of our tax deductions, what do we do? What can we do? All we can do is keep good records and make sure you're just not cheating the system right now. All that shit, y'all trying to get an extra $2,000-$3,000. I don't recommend it. I don't recommend it. I don't recommend it because of the additional bandwidth and resources that they have. Okay. All right. So we talked about the notices that everybody is receiving. Not everybody, but quite a bit of people are receiving. Okay. That was number 1. We talked about your refunds being lower. We talked about you guys being disorganized. And then we also talked about them scrutinizing tax credits and stuff. Okay. The 5th thing that I'm also noticing this tax season, okay, is that, how would I put this? Many of you still are making investments just for tax write-offs. And you're not consulting with your accountant or your tax person before you guys go out and make those major purchases. I'm talking about from houses, cars, and all sorts of investments. Guys, if you are making investments, you are supposed to consult with your financial team. Your financial team consists of whoever's filing your taxes, whoever's doing your bookkeeping, your attorney, and your financial advisor. Almost every transaction that you guys have in your business or personally, it might impact one of those individuals. Okay, so some of you are buying houses and hoping that you get a bigger write-off than what you get. So here's the thing, guys. This goes back to you all understanding. Give me 1 second. And then we're going to stop here. We're going to take a quick little break after I'm done. You guys understanding the difference between the standard deduction and the itemized deductions, okay? So first things first, I know you guys have heard of, oh, I'm filing single. Oh, I'm filing Murray filing separate. Oh, I'm filing Murray filing jointly. Oh, I'm filing head of household. All those, right, are considered filing statuses. And each one of those filing status are assigned a certain amount that you will be able to deduct, which is called your standard deduction. Okay? Every American get the standard deduction. I don't care if you're single, married, whatever the situation may be, right? Everybody gets the standard deduction. That is not predicated on, give me 1 second. The standard deduction is not predicated on you having a home or what taxes you didn't paid or anything, okay? And that's the first thing that you guys have to understand. Now, when you guys go and buy a home or you pay a large amount of state taxes, or you have an enormous amount of medical expenses that exceed the 2%, the 7.5% of your AGI threshold, then, and your charitable donations, right? Then you qualify for itemized deductions. So your itemized deductions consist of, again, your mortgage entrance if you own a home, the property taxes on that home, okay? The medical expenses that you incur out of pocket that exceed a certain threshold, your charitable donations, okay? When you total all of those up, if that amount is higher than your standard deduction, which is your head of household, you're single, Murray filing separate, then guess what? Then you are eligible, or you should take the itemized deductions. So in all, your house doesn't give you a 100% guaranteed write-off. Your charitable donations does not give you a guaranteed 100% write-off. Your medical expenses do not give you a guaranteed 100% write-off. Your real estate taxes does not give you a 100% guaranteed write-off. Once you guys understand this, then you will see why it's important that you consult with your tax professional before you jump out there and make investments that is solely for the purpose of reducing taxes. Now, that's for my individuals. Now, for my business people, same goes for you. Some of you investments into cars. Some of you are buying or getting office spaces and all of this stuff because you're hearing that you can write off this and you can write off, like everybody get a write off. Like this is what I'm seeing online. Like you get a write off, you get a write off. Guys, it doesn't work like that. Okay, first of all, let's first fully get this concept down pat. As a business person, for you to be able to write off any expenses that is higher than your income then you, number one, have to be operating that business for a profit with a profit motive, meaning your intentions were pure. You started this business because you wanted to make money, you wanted to serve, you wanted to bring this product to the market, and you intended to do that, and you attempted to do that. You cannot write off a car just because you have an LLC. Because that's what you're doing. You guys are seeing people say, oh, get an LLC and get a car in your business and then you can write it off. No, it don't work like that. Was that LLC created for you to make money? Was that LLC created for you to profit in your business? And the IRS has a way to identify it, and it's really solely on the skill set of the agent. They're going to pick your brain, ask you questions, and I'm not going to tell you guys that. That's for my client. But there's ways for them to know if you're operating that business for a profit motive. So we're now here, guys. This is all that y'all doing. And then they're hiring your child, like all this stuff. Hiring your child. Now everybody that's saying it now, right? I thought, and guys, let me go ahead and say this. I've been teaching y'all this since 2016. I went back and I found content from 2016 when I've been teaching you guys this. So now the people are telling y'all, the so-called experts are now telling you guys, oh yeah, you need a job description. You need this, you need this. Make sure you hire. But they still telling you guys to still take the 12,000. They still telling you guys to still take the full amount, which is the standard deduction. They're going to mess you up again. Consult with your professional. Consult with your professionals, guys, the people that you trust. That's legit. We're in a different arena. And y'all want to thank me later. The people that listen to me, they thank me all the time. They're my clients. They thank me all the time. The people, and some of them don't even be my clients. They just be like on Instagram and Facebook like y'all. And they'd be like, oh, I'm glad I didn't do that for Folasade. That's all I want to do. Just make sure y'all don't just mess yourself up. Because in the end, some of this shit that y'all doing, and I'm sorry to curse, it's fraud. Now, I'm not a criminal attorney. I can't fight y'all against criminal charges. Right? So you're going to need a criminal attorney. Some of y'all are doing some criminal stuff on y'all taxes and you don't even realize it's wire fraud. It's bank fraud. It's so many different frauds. And I appreciate you guys too. So we are here, guys. We have so much to deal with. Then they haven't need the credits. So the housing, first-time home buyers credit haven't been approved. The student loan, all of that stuff haven't been approved. Because between you and us, guys, the government is really close to a shutdown. So we're close to a shutdown. There's scrutinized tax credits to recover the economy. All of our funding is going out of the country. And so now we are here to fend for ourselves. And the way for you guys to be in control when we have so much happening is to make sure that you stay on top of the things that you are in control over. So you in control over the amount of knowledge you have. You in control over your organizational skills. You in control over tracking your stuff. You in control enough taxes throughout the year. You in control over making sure you do things right and have some form of integrity. You guys are in control over that. We're not in control over what Biden and his people do. We're not. So with that being said, guys, we're here. Stop trying to cheat the tax code. The IRS is here. It's nothing else nobody can do. All they're going to do is throw on fake expenses on your business, and you're going to be the one have to back it up. All they're going to do is inflate some type of expense that is actually reported to the IRS. So here's the thing. And I wasn't going to say this. This is something I'm going to just throw in. The IRS receive all of your mortgage interest statements from your mortgage providers. So the amount of your mortgage interest on your tax returns should really match what the IRS have, unless you have something from your HUD-1 document. Bryce, you're loud. Sorry, y'all. That should match. Your property taxes is also reported to the IRS. So that number should match. Your W-2s is also reported to the IRS. Your 1099s from your retirement accounts is also reported to the IRS. Okay. Your 1099s from you working as an independent contractor, if the company is doing it right, it's also reported. If you make money through a third-party merchant like Stripe and PayPal, that income is also being reported. Guys, so we're in this, everything connects. I've been telling you guys, everything connects. And then for all of you that collect cash, you probably like, oh, Folasade, you ain't said nothing about no cash. Yes, I did. Well, no, I didn't, but I'm about to say something about it now. And guess what? If your client get audited, see, y'all think you being hindered has something to actually do with you or you getting the notice. This is the kicker. For all of you cash intensive businesses where y'all collecting cash, let's say your client get audited and they need a receipt. They're going to need a receipt from you. And so guess what? Now the IRS like, okay, you received this. They might call you, oh, can you verify that such and such? I got a head for y'all. Do you verify that such and such paid you this much money? Now I don't know what they're going to do with the information after that, but you never know. But here's the thing, guys. I've been seeing this, so many people being impacted. Or you guys going to all of these tax people, and then the tax person get audited, and then all of their clients get audited. Yes, you have to, Sonny. You have to, Sonny. So Sonny on Instagram saying, that's a good question, y'all. He said, do I claim the money I get through Zelle every month? Yes. If it's business income, y'all, I don't care where it come from. You want to claim it. Okay? Okay? Yeah, you want to. Because some of you guys have money coming into, other pockets and stuff, and you guys need to claim it. But guys, just give me 1 second, guys. We're going to take a quick little break and we'll be right back. Break. We're going to take a quick break. Instagram, give me 1 second. Hey guys, welcome back. Except take the thing down. All right, guys. Sorry, technical difficulties. All right, guys. Welcome back to the Money Zone. I'm your host, Folasade the Accountability Accountant. Guys, like I said, please bear with us while we're going through this transition from RIP Radio to Beltway Radio, guys. We're still trying to get all of my I don't know, my show intros and stuff together. So if you don't hear no sound, it's okay. As long as you can hear me, it's good, right? But if you can't hear me, then but I think you can. Okay, so guys, you want to check out segment 1, guys. I'm just gonna make this segment really, really quick, but I just want to just conclude, and we do have like 2 questions, and I'll answer the question. So somebody on Instagram asks, what happens if you're not keeping up with your bookkeeping? Nothing happens. You just don't have proper records. You may underreport your income. You may overreport your income and pay more taxes. You're not going to have the expenses you need to manage. But you won't have all the expenses that you. I'm just getting so many calls of distractions right now, guys. You won't have all of your expenses to be able to reduce your tax liability. So it's just a lot. It's very important that you guys make sure you're doing your bookkeeping, because it's not only for taxes. Like, let's take that out. Bookkeeping is really what tells you what's coming in your business and what's coming out. Keeping, what you're not keeping, what's profitable, what's not. Like, bookkeeping is key. Like, it's beautiful when you're really in your CEO mind frame and you're looking at your business numbers and you're like, oh, I only made $10,000 last month, but the previous month I made 25,000. What did I do differently? Oh my goodness, I spent 5,000 on this. What did I do? Bookkeeping is beautiful, guys. Like, stop being afraid of doing your bookkeeping, especially in the African American community. You guys are afraid to pay an accountant to do your accounting. You're not seeing it's valuable. I don't know what's going on, but y'all need to get rid of it. So, guys, I have to wrap up. It's a lot going on. I will see you guys next week. We will get better with time. Just bear with me. I love you guys, and I will start going live again. But I wanted to take my little break while I can, because I normally burn out during tax seasons and be down and don't want to work and don't want to do live streams. So I said I'm gonna just take my time when I have it. So I've been enjoying my little time, just working in the office, work with my team, and getting our returns out. But I will be going live next week. All right. So I love you guys. I will see you guys next week. Bye. Bye, y'all.